Hello, and welcome to What is Crypto? I'm Matt, and this is Crypto. Here I discuss all things crypto. So yeah, if you could like and subscribe to the channel, that'd be awesome. New channel, it's growing. I think I am producing some pretty cool content. I've got a lot of thoughts on the space. I love crypto, I love everything. So yeah, genuinely follow along. I appreciate it, I appreciate you, and let's get into it. Today I'm going to be talking to you about the market at the moment and what I see Bitcoin doing. So we've just started to form some lower highs and lower lows. So that is a lower high and a lower low, lower high, lower low, lower high somewhere around here. We are following this pattern. We do have a key resistant level at the 65K mark. So a lot of you might be scared at the moment. But if you have a look back at history, as history doesn't repeat, but it rhymes, really important to note a couple of things. So we've got the Bitcoin halving coming up in 34 days. So massive catalyst. Now, if you look at the weekly view on TradingView and you look at what happens post halving, you have massive booms in price. Absolutely, yeah, absolutely huge. So 640%. I'll just do these roughly because the exact number isn't that important. You have 3,000% odd, and you have, God, I haven't even zoomed out enough. And you have in 2012, yeah, 1,216%. No, sorry, 9,662%. Yeah, huge numbers. But what you also have is you have sell-offs leading up to or around the halving. So in 2020, you had a sell-off of 63%. In 2016, you had a sell-off around the halving 40%. And in 2012, you had a sell-off of around 50%. Now, these were bought back up quickly. They didn't last too long. I think the longest one, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 12 weeks. So you got a few months there. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, 2 to 3 months of ordinary price action, but negative for 3 weeks. And then it started to rip. You've got negative for 1, 2, 3, 4, 5, 6, 7, 8. And then it started to rip. And here you really only had negative for 1 or 2 weeks. So short-term price volatility leading up to the halving is expected. Now, on average, that is a 40% dip. What would a 40% dip do from our highs here? So a 40% dip would take us down to 43K, key level of resistance. Now, I don't think that's likely, and I don't think that's likely for a number of reasons. I don't think that's likely because we have the institutional demand from the ETF. I think that people aren't going to want to sell, and I think the market cap is way bigger, so it moves up less, but it also moves down less. So I think what we could expect to see, going back to the 4-hourly chart, I think what we could expect to see is a 20% dip. And a 20% dip takes us down to 59K, which is a little level of resistance. If we break through 59K and go even further, I could see us getting down to, 53 to 50K, worst case scenario. And that would only be a 30% dip, which is still smaller than our previous dips. So yeah, I guess what I'm saying is don't get shaken out of your bags. It is still early in the cycle compared to the halving. We still have at least 6 to 12 months to be profitable, although the next 2 months could be a bit spooky and a bit scary. Don't sell your Bitcoin, don't sell your bags. Yeah. Anyway, cheers, legends. I appreciate you. I appreciate your time. Thanks so much. Still new to the YouTube content making stuff. So flick me a like, flick me a comment. Follow if you can. Yeah, appreciate you. I really do. And yeah, I love this space. I've been here since 2017. I got wrecked in 2017. 2021, I did okay. And 2024, I'm making some pretty crazy gains. So yeah, cheers, legends. I appreciate you. Catch you in the next one.